Welcome back to Markets and Macros. Macros are bad. Markets are not that bad at this point in time, held up a little by global cues, but we are beginning to see all of them losing the kind of early morning gap up opening that they had. So now it's even the Sensex and the Nifty moving to largely flat terrain. Lakshmi Vilas Bank numbers over there, net profit at 25 crore. We have to really wait and see. It's not a much tracked stock, so we'll have to wait and see what the comparisons look like. We'll be with all that in a minute. The stock is lost, so looks like somebody in the street was expecting a little more than 25 crore. Let's look up for the numbers, just see if there's anything in terms of
flat
the NPA.
On a year-on-year basis.
No, I guess it must be some kind in the NPA basis. Number. Which
we'll wait by for the asset quality and see, because generally these small banks tend to surprise on the asset quality. Stock is down around 1.5%. We'll wait by for the NII figures as well, but absolutely flat on the bottom line at this point in time. Wait by for the provision figures as well, considering that the profitability is absolutely flat. Let's get talking on the markets then. Nischal Maheshwari of Edelweiss Securities joins in with his view. Nischal, good to see you in. IIP figures pretty dismal at a contraction of minus 1.8%. How exactly have you read it, and how would you extrapolate it onto the markets and the reaction that we've seen?
Yeah, I think the expectation was close to around minus 0.2%, and it's come at 1.8 minus. Especially, I think couple of things what I've gone through it is, one is the capital goods still continues to be very, very bad. And I think that's what it is. If you look at on the capex side, there is nothing which is happening there. Order books for most of the companies are, the growth is very, very small. So I think that is all reflecting into the capital goods growth. The only positive side remains to be, I think, on the consumers, where the consumer durable figure is pretty good.
No, you know, perhaps one key takeaway from the IIP number has been that this is also a washout quarter. If one was looking for a bottoming out, that bottoming out is not happening. We are still bottom, or so it seems. So how does this impact your earnings forecasts? At the moment, do you think that with more and more people coming in with GDP downgrades, are we going to be seeing more corporate earnings downgrades?
Lata, very interestingly, this has been our theory. I've actually put it down in my last strategy note, that historically, if you go and look at, I have studied the last 3 downturns in the country, whether it was 91, 92, then 2001, 2, and again 2008, 9. In all the 3 times, what you see is once the corporates come to a conclusion saying that the growth is now not going to be there, and see, they stop chasing the top line, they start focusing very, very strongly onto the bottom line. And that's what we have seen in the current quarter also. The top line has been around 15 to 16% growth, but the bottom line has been pretty steady at around 14%. So that is what is really works basically. And this again, quarter after quarter, you're going to see people are cutting their employee cost, SG&A expenses. This time around, the depreciation has been one of the big saving things basically, because people have not invested into in the capex. So that's why I think we are not seeing that there is a serious downgrade as far as earnings are concerned for FY13.
Okay, so what is the key takeaway in that case from the earnings season so far? Let's start with some of the high-profile sectors, say, for instance, automobiles. Do you have any buys in the space now after you have seen the numbers, though Tata Motors is still awaited today?
I like Mahindra & Mahindra yesterday came out. I think the numbers have been pretty good. The stock has been okay, given that their UV segment has grown very, very strongly. Definitely the tractor and the farm equipment side of the business has been under pressure. But the valuation is supporting it. I think the stock is around 9 to 10 times. I think that's a good stock to look at. Again, on the two-wheeler side, I think Bajaj Auto continues to do pretty well, because around 45 to 50% of its sales is coming from exports. So I think these are the 2 stocks which we like in the sector.
We have the figures in terms of the NPA figures for Lakshmi Vilas Bank. That one should come up for you on your screen. The gross NPA on a sequential basis as well in terms of percentage has increased quite considerably to 3.58% versus 2.98% in the previous quarter, and the net NPA too has increased quite significantly to 2.21% versus what they did in the previous quarter, which was 1.74%. So forget a year-on-year comparison, even a quarterly comparison in terms of the asset quality has been extremely dismal for Lakshmi Vilas Bank. So the NII at around 80 crores, we'll wait by for a versus figure, but definitely in terms of the gross NPA situation, not looking very good for Lakshmi Vilas Bank, down around 2.2%. Small stock has market cap of around 300 crores at this point in time. But Nischal, just wanted to concentrate on Bharti. Were you on the conference call yesterday, or was your analyst on the conference call? Because that's when the stock actually fell off post the conference call, and there were these EPS downgrades which have been quite significant today. What did you make of it, and is it a good time to actually bottom fish?
Actually, I was there on the conference call, and I think what most of the people have misread is that Bharti is still focusing on, or rather market is expecting that the Bharti is going to still focus on the top line. They are going to be focusing on more market share. What I think, what the management was trying to say, that they are trying to figure out ways, basically not to destroy value, but continue to maintain their market share. So they were saying that they are looking at couple of ways basically, or couple of couple of ways only, how to actually reduce cost in-house so as to bolster the margins. So I think that's what the impression the management gave. But obviously I think given that this has been the 8th or 9th quarter where the margins have been under pressure, so I think the market was waiting for a push, and I think the stock fell. Having said that, I think there are short-term concerns as far as Bharti is concerned. Obviously, the major being the regulatory outlook. But what we people are not really looking at is the long-term cash flows for the company is pretty strong. According to our calculations, Bharti will be generating close to around $5 to $6 billion of cash in the next 3 years. And that's a pretty strong story out there in Bharti.
Okay, Nischal, just hold on to that thought. There is a further bad news coming in for Infosys. A second former employee, this is the second case I mean, has made allegations that the company is misusing visa rules, US visa rules, or alleging visa fraud really. So this is the second case, and it's the suit was filed on August 2nd. We are trying to get you more details. This is official statements coming in from Infosys and quoted by newswires, Dow Jones newswires. So that's what we have got officially confirmed. The news was out a little while ago. Now this is confirmed by Infosys. This is the second case of an employee alleging that there is a case of fraud by the company. I think the former case was Jack Palmer.
Right.
That case, of course, is now well known. The company is still in negotiation, and this is yet another case that is being filed in the court. That's the Infosys chart. You can see that sharp nick lower after the company confirms that such a case indeed has been filed. Not looking good at all. Well, that's the next ball to you, Nischal. What have you done with the IT company basket? Is there any kind of a defensive play here at all? They seem to be now behaving like cyclicals actually. Anything in this pack?
We continue to like Infosys and HCL Tech. I think Infosys valuation wise looks pretty good at these prices. I think a lot of the negatives are priced in as the management plays out its strategy. I think at these prices one should start accumulating Infosys. The second stock we like in the large cap is HCL Tech out there, and I think they have been continuously surprising on the margins. Now historically HCL Tech has given a guidance and not been able to achieve it, but for the last 3-4 quarters they have been able to not only achieve that but better the margins, and I think market is rewarding them for that. Another stock which we like is Satyam. Even after once the the merger happens with Tech Mahindra, I think the stock is still cheap. Should be around 8 or 9 times, and I think that could be another stock one can look at, given that together it's going to be a formidable company of around $2.5 billion size.
All right, Nischal, we'll have to leave it at that. Thank you very much for joining in. So that's the word coming in from Edelweiss on the markets. Just a quick word on the markets. We're absolutely stable at this point in time, off the day's high, but absolutely stable. And Infosys, we do understand that the former employee who has made this charge, we understand was possibly an account manager with the US branch of Infosys, and he had filed a complaint internally, but no action was taken. This is basically right now only from reports. We'll wait by for some official comments from the management with regards to these news reports doing the rounds at this point. Time for a break, but on the other side we'll get a preview of what to expect from Tata Motors as well as Ranbaxy.